So let's get to Abuja, where our studio is hosting two directors of the central bank. Let's talk to Musa Jima, who is the director in charge of payment services management at the central bank. He is also joined there by Kofo Salam Alada, who is the director consumer protection unit at the central bank. Gentlemen, good morning and welcome to the program.
Morning, Bosin.
Great.
Thanks for having us.
It's good to have you. Thank you very much. This is coming straight from the Department of Financial Services at the FSS at the central bank. So I'm just going to ask Musa Jimo to tee off this conversation with us in terms of the payment system. Where are we coming from in terms of this revision? How did the central bank arrive at this particular revision to the May 2017 guidelines? What has happened between then and now?
Okay, thank you very much. Thank you for giving us an opportunity to share this with the public. Yes. Okay, thank you very much for giving us an opportunity to share this good news with the public. I think for me, it's an end-of-year news, even though it's going to be effective 2020. There are 5 major areas on our guide to bank charges that I think will be of immense benefit to the public. At least it will allay
just a quick one.
Musa, on electronic payment.
Hello,
vis-a-vis charges.
Musa Jimo, very quickly, my question direct is that we don't have all the time on this conversation. So I'm giving you a direct question. What had happened between 2017 and 2019 for the central bank to review these guidelines? That's my question.
Okay. Yeah, thank you very much. It has to do with the feedback that we got from the public, increment in volume of transactions, what we have seen within the e-payment space, and our drive for financial inclusion. These are the 3 major factors driving the review of the charges. We're concerned with all the participants within the ecosystem and looking at the consumers, to be very specific, who participate in the entire payment transaction landscape. So in order to drive our financial inclusion, we need to talk about cost. We need to reduce cost because cost is one of the major deterrents to financial inclusion. So that's why we took that as a major consideration for this year to see how we can bring down the cost of electronic banking to encourage the adoption of electronic banking and bring those that are outside of the financial system into the ecosystem. That's one. We also look at infrastructure. Yes. So we also looked at the infrastructural development. How can we build a payment system that will stand the test of time that can meet international best practice, looking at securities and all the various incursions into the arena. You talk about fintech today and other major players that have come into the ecosystem. So when you look at everything together, we need to look at how these entities can symbiotically work together so that we can build a very resilient payment infrastructure. These are the considerations that led into the review of the guide to bank charges.
Thank you. Now, Kofo, let's get your initial reaction to these charges. Do you think this reduction in ATM withdrawals, in maintenance fee for cards and what have you, do you think this has addressed the concerns of consumers in the banking space? There's been outcry over the last 1 year or more about how much bank charges. Do you think this will go far and deep enough?
Thank you, Bosin. Like my colleague mentioned, this was a well-thought-out plan, and it's a Christmas and New Year gift, for both consumers and banks in Nigeria. It's been noted, like you indicated, there has been outcries out there about charges, but also people out there, most are not aware of the fact that the central bank will actually step in, when it comes to these charges. The background to the moderation of charges, also, we have looked at what has happened over the years, like you indicated. Yes, a lot of financial products are coming out there that will need to be taken care of. And we should also let it be known that charges will actually nearly moderate themselves as markets develop. We allow competition, but central bank will step in, to ensure that financial system is stable, with consumers actually taken care of. Let me put it out there that data coming out from NIBS and other sources have actually shown that transactions are already moving up. So the volume have grown substantially between 2012 and 2018, where we have over 4,000% increase. From about 48 billion to 2.3 trillion. So for consumers, we have always assured them that they will be taken care of, and that is why the two regulations have come out together to address their concerns. What we can actually tell them, yes, you have given us all the details out there about these charges. For us, it is how central bank will now ensure that banks comply with these charges, they do not step out of bounds, and we should also let people know that where you have concerns, we've always said this, where consumers have concerns, they should always cry out to their banks first, and if their banks do not respond, they come out to Central Bank of Nigeria. The opportunity you have given us today now is to let people know that you are not being left alone. Well, again, the release of these guidelines is to address the point that people have been raising, that on one hand, we're saying that people should come into the financial ecosystem. On the other hand, maybe they are being left to the vagaries of arbitrary charges by financial institutions. We specifically put it out in this guideline, the guide to bank charges, that we're addressing three major things. A major part of it is to address, reduction or total elimination, rather, of unapproved, arbitrary, or excessive charges by banks. Banks are expected to remain, we want them to remain in business so that central bank can fulfill its major mandate of financial system stability. That is the overarching objective of central bank. But in the same vein, we want consumers also to patronize this particular system so that it will not be left without patrons, because it is the more customers we have in the system, the more people who are financially included, that is best for the financial system. So as we step into the new year, it is our expectation that banks will please try to implement these new guides that we have. But even before now, we must also know that in order to enhance competition, banks on their own have been putting things in place to ensure that their charges go down, because they know that newer banks are coming, the challenges will be stiffer. So what do? What you need to quickly do is to ensure that you are well positioned to attract, you carve a niche for yourself to attract customers. For example, as we go along, we'll be talking more detail about the charges. For remote on-us transaction on ATM, some banks have already dropped it. Some banks have reduced it considerably. The CBN now is saying you cannot do more than 35 naira, down from the 65 that was there. And also, in order to reduce influx into the banking hall, to reduce the overhead of the banks themselves, what do? We want to encourage e-transactions. Yes, all that we have put in place to encourage e-transaction is also to moderate the charges that we put out there. So we encourage people to go onto the CBN website, download the guide to bank charges, and see what we have put out there, especially on electronic transaction. We must also say that the expectation that payment service banks will come into the fray in the new year make the central bank to actually focus more on electronic banking transactions as a way of achieving its cashless transaction. Here we're also aware of the hues and cry about what we have done about cashless transaction. If we say these are the charges you need to pay, it is to disincentivize people who want to continue to do cash. We all know that economies around the world are actually placing less emphasis on cash transactions. So why should Nigeria, which is a force in the EME market, continue to be known for huge cash transactions? So we want to request banks to understand with Central Bank of Nigeria that any time that their needs are put forward, the Central Bank will always be prepared to meet them. That is the essence of our coming out on guide to bank charges.
Yeah, well said, Kofo. Let me just ask this before we take a break. We'll continue this conversation after the break for a couple of more minutes. But let me ask Musa here about the landscape. When customers complain, when Nigerians complain about bank charges, how much change have we seen in the landscape in financial system in Nigeria in recent years, such that right now when people say, well, the central bank is allowing this kind of charges to be dropped on us by banks, who are those involved in the ecosystem right now?
Okay, thank you very much. The entire payment system ecosystem is driven by, I think, 4 key major stakeholders. Take the consumer, that is the demand side, people who demand for the service. And then we have the banks who provide the financial service, the account management system. And then of recent, we have a middle player, which we popularly refer to as the fintech. These are people who provide third-party services on the account held by banks and provide to the consumers. And then we have the regulator, the central bank, that moderates and provide a stable environment for everyone to thrive and conduct, sensibly. So I would say there are 4 major stakeholders, and what we try to do is to balance the equation so that it's actually a win-win. From this guide to bank charges that we have released, if you check through, just like you have done a quick review of it, you see that the consumers are happy. For example, the ATM has come from 65 to 35. That's a tremendous one. The charges at merchant outlets have also dropped. And then you also see cost of token for security, a card maintenance fee, which has been a major discussion point, has also come down. I mean, from 600 to now 200 per annum. The consumers are happy. The banks are also happy because what this will entrench is that there will be more people that will patronize electronic transaction and therefore more volume. The name of the game is volume. Once you have more volume, you'll be able to recover cost and make profit. And also, you also talk about security. Underlying, all this discussion is the security and the protection of the consumers and the banks themselves. We need to protect ourselves because we know what the cyber criminals are doing and what the fraudsters are doing. So around it, we also have the fintechs and other third-party service providers who provide the infrastructure to ensure that the entire ecosystem is ring-fenced and protected against attacks. And then you have the regulator, which at the end of the day, we try to create that symbiotic ecosystem where everyone can thrive together. So these are the major stakeholders that were brought in having this discussion, in addition to the fact that we compare what we are doing here with some other jurisdictions that have the same configuration like Nigeria.
Okay. Musa and Kofo, 2 of you stand by in Abuja studios. We'll continue this conversation after the break. You're watching Business Morning. You're watching Business Morning. Let's continue the conversation around the revised guidelines for bank charges and consumer protection, a very comprehensive 76-page document released on Sunday by the Central Bank of Nigeria. 2 directors of the financial regulator with us from Abuja studios. Kofo is in charge of consumer protection department at the Central Bank, as well as Musa Jima, who is the director of payment systems management. Thank you, gentlemen, for standing by. Kofo, let's get back to you to start the second round of this conversation in terms of the charges. These charges guidelines also relate to interest rate on deposits, on bank guarantee, on agent banking and all that. So aside the regular cash-based transactions via the PoS or whatever, now you have these issues relating to deposits and what have you. What's the icing here on the cake for Nigerian customers, bank consumers?
Thank you very much. What you have now is just a reinstatement of what we have had before. For interest rates elements, are usually driven by the market, but what we try to do is to anchor it, and that's why, people also find people wait, with bated breath whenever the MPC is meeting, what's going to be the anchor rate and the rest of them. Agent banking, yes, still also related to what we've discussed earlier. Interest element, like I said, driven by the market. What we have looked at now is that where between a customer and a bank, rates are being agreed, lending fees are being agreed, it is expected that banks should keep within such rates, and anything that's beyond that, is supposed to also be discussed further. We will not be going into the consumer regulation, protection regulations now, but the guide to bank charges also specifically states out there that the monetary policy and credit guideline being issued by central bank also is also very, very relevant. So if you have agreed rates, you are supposed to stick within the rates. If there's going to be any variation at all to any of these rates, so the customer is supposed to be given about 10 days, before the variation will kick in. So, and that is to afford the customer the opportunity to either continue with the product or to opt out of that particular product. So, for us in Central Bank is to ensure that the customer is protected. The banks are also to be kept in check as well. Let me also just quickly mention the fact that we've always heard this, which is the fact that, oh, central bank will just put this out there, and banks will continue to do what they are used to. That is a wrong notion. Because central bank from time to time, prudential regulations is ensured by banking supervision department, they're out there, other financial institutions supervision department, they're always out there having field examination. The same thing goes with consumer protection. We carry out compliance examination from time to time. Anything that we find that even consumers have not even reported themselves, we spot them and also put the banks back into line. So all the activities in this area will be stepped up. And why should this be done? If we're asking people to come to be financially included, they also should have the assurance that my funds will be safe, that we also will maintain financial stability, funds will be safe, and I will be treated right by these people who are expectedly, stronger than the customers. And that is why in adjudicating between complaining customers and the banks, it is what we're trying to do is to ensure that the customer does not carry the short end of the stick at all times. Anything, even if there's any ambiguity, the expectation is that the ambiguity will be resolved in favor of the customer because he is the poorer and the weaker side. So interest rates, yes, will continue to be driven, and if we can quickly say that central bank between July 2019 and now, you'll recall that one of our policies to ensure that, credit begin to grow is the introduction of what the loan-to-deposit ratio has been, fixed initially at 60, now at 65. It could rise, as you may also know, eventually. What has this done is to drive down, it's already driven down interest rate anyway. So for businesses in Nigeria, which are small businesses especially, they are the concerns of central bank. Also, we also expect that with fiscal authority also stepping in with the signing of the budget, it is expected that both monetary and fiscal policy will be complementary in the year that we're entering into. And credit to, especially microcredit, will continue to grow. There's no better time for central bank to actually step in to ensure that customers are protected than now. Because with the growth in credit and with the encouragement of bank customers to go for credit and also mandating the banks also to lend, and banks also, I expect, we're not saying they should not carry out their due diligence on customers. There are rules also on that anyway. They are mandated to do credit check on these customers. So interest rate will be driven down, and it is for us as central bank to ensure that interest agreed with customers are maintained, subject to discussion on variation, which the customer also should be given the opportunity to decide whether to continue with the product or opt out of the product.
We are here, which is still out there, is how to stamp out the stamp duty on POS transactions. Musa Jima, let me ask you this question. What is the central bank doing in this regard? The transactions, that stamp duty element, is it still there? If it's going out, when?
Okay, first, stamp duty is not a central bank regulated fee. It is actually, an act, a fee regulated by an act. So CBN doesn't regulate the stamp duty. That's number one. So we can't change anything and we can't push anything in that direction. But let me explain that stamp duty, as it is today, has been misinterpreted. Our circular that talks about merchants paying stamp duty according to the law does not say that the stamp duty should be paid by the consumer. That's actually a misrepresentation of CBN directive. What our directive says is that merchants should pay all necessary tax as regulated by the government agencies, including stamp duty. For every single transaction, and I mean, short of interpreting what the Stamp Duty Act says, when there is an electronic transaction to an account other than savings account, and the transaction amount for now is more than 1,000 naira, you have to pay stamp duty. And so what our explanation to the merchant is that we would like the banks to ensure that the merchants comply with this directive by ensuring that every single payment that customers make to them, the merchants pay the regulated stamp duty of 50 naira. But what has happened is that they have actually transferred this fee blatantly and openly to the consumers. This is very wrong. No single individual should pay 15 naira in addition to the cost of the good. It is not, stamp duty is not to be paid by individuals that are consuming the services, goods and services of the merchant. The merchants who are receiving the money are the ones that are supposed to pay. So to this degree, the stamp duty still remains and it cannot be changed by CBN. What we are simply doing is to ensure that the institutions that we regulate, which is the bank, become more responsible in terms of ensuring that this fee is collected and given to the government.
Looking at a very long horizon, and you as the director in charge of payment systems have a very big view of what's going on in the fintech space and all that. What further innovations and whatever are you looking at into the new year and the years ahead that you think the central bank will have to be proactive in terms of containing what everyone within the system do to make sure that consumers are not hurt?
Okay, basically, it's actually one of our major concerns because we have a lot of players within the payment ecosystem now, particularly the fintechs. So what we're trying to do is to build regulations that makes the market conduct, very responsive. And so we are coming out with a lot of innovations, a lot of regulations that will basically drive behavior and compliance, one of which is the regulatory sandbox. We are implementing regulatory sandbox that will guide the entry and of all the payment service providers into the arena. We want to have a view. We want all the participants to be within the radar of the central bank. This is the only way we can control them and ensure that they comply with regulation and standards. So regulatory sandbox is one of the things we're bringing in. The other thing is about open banking. It's been talked about. Everybody wants to have a choice. Giving consumers the choice to have access to different varieties of services is also a major incentive to drive adoption. So we'll also be looking at open banking to drive financial services in the country. I think this would be two major initiatives that will be like a hanging fruit for us to execute within the first few months of this year. There are other initiatives that are coming, and as you know, technology changes every day. So you can actually be planning on an initiative now, and before you kickstart, another one comes in. So, but for these two, we are quite sure we'll drive it because it's basically regulatory driven.
Kofo, I'm going to give you about 1 minute to wrap up this conversation with you gentlemen. It has been very exciting. You are the man who is in charge of consumer protection at the central bank. So what's the size of complaints that you're getting from consumers as we speak, and how are you ensuring that those consumers or those complaints are attended to? Because sometimes some folks may feel that the central bank is too far away, the bank is closer. So how do you bring everybody closer here? What's the regulatory framework or platform now to ensure that the complaints against banks, if they misbehave, and they always do here and anywhere in the world, are checked right on time and there's a redress on behalf of the consumers?
Thank you, Bosin. Quickly, let me just mention the fact that in addition to what my colleague has said, I want to mention the fact that 61% of e-transactions in Nigeria actually for transaction within the threshold of 10,000 naira. And I think maybe government was aware of this, and that is why the finance bill, which we expect to be assented to very, very soon, will be addressing the stamp duty issue. So it's only for transactions above 10,000 naira now that they attract 15 naira stamp duty. Coming back to what central bank is doing, we will continue to do what we're doing. And again, a major one is the introduction of the consumer protection regulation, in implementation of the consumer protection framework that came out in 2016. So what we have done now is to ensure that banks put in place communication channels through which consumers can reach them timeously. And we're also mandated that in fraud-related transactions, it will be a 24-hour thing by banks. And our expectation is that the contact centers of banks will cease to be just contact center that will just receive complaint and sit down there. For fraud-related transactions, it should be reported immediately to those who can act. You don't expect that a fraud occurs midnight Friday and people will have to wait till Monday morning before anything is done. No. So there's our expectation under the complaint handling and redress chapter of the consumer protection regulations that all these will come to pass. So yes, it is not our expectation that consumers should come first to central bank. No. we are not retail bankers, we are regulators. So the first step is the banks themselves. And we are expecting banks to come up with compliance plans that will show that they are ready to implement consumer protection processes within their own system. And this must be approved by their board. And when the board sanctions, the process, we expect that that is the highest, governance level of a bank, and the officers should comply with them. So we can tell consumers out there, like never before, 2020 is your year. The banks will take care of you. They are mandated to by new regulation, which we may be talking about some other time, that your days, the days of your being treated wrongly are over. And you can now be almost at the same level with your banks. It may sound sweet, to say, but central bank is ready to implement this. And the banks are also ready. Quickly, sir, viewers. Yeah.
Yes, I was just about to say that
Boss, let me just place it is that.
Please go ahead.
The viewers should also know that these regulations do not just come from the skies. All the stakeholders, consumer advocacy groups, these are NGOs who take care of consumers. They also have input in this regulation. So let that be known.
You're sounding like a very good sales marketing person, maybe more like TV evangelist. Thank you. It's your year, 2020. Thank you so much for the gift. Kofo Salam Alada and Musa Jimo from the Central Bank. Thank you very much, Director in charge of Payment System and Kofo in charge of Consumer Protection. Thank you very much. We appreciate your time and happy holidays to every one of you. Thank you so much.